Hey traders, it's Blake Morrow with Trader Summit, and I have Mr. Jim Welsh of Macro Tides. He's with us. It's Friday, so we always bring in Jim. How you doing, Jim?
I'm doing good, Blake. How you doing?
I'm doing all right. It's it's another week, another
You're
rally.
scorching.
NVDA has led the charge.
Yep.
And it seems like, here we are at options expiration. Thought we might get some volatility, and there was some volatility, but overall, markets are holding on to their gains. It looks like we're going to
Yep.
head into, another week and probably plow higher, but we're interested to hear what your perspective is.
Well, thank you very much. I'm interested in trying to make it up.
Well, you're really good at putting together all the puzzle pieces for us.
Yeah.
But
Well,
how do you? I mean, I know today
yeah.
this week was a little bit of not a lot of data. We had some central banks that met this week. Got surprised with the Swiss National Bank cutting rates, but overall, the data that really surprised me was today's data. We had producer or PMIs. They came in and they came in much stronger than expected. It's showing that U.S. exceptionalism story again. And as I mentioned, some of the traders in our community earlier today, it's like it's really hard to sell stocks when you have economic data that is as robust as it is. So what did you make of it? Because it was the S&P, data,
Yeah.
that came in.
Well, last week we talked and I showed a chart of the semiconductors, and it basically was like, this is the group that is pulling the rest of the market up. So until we see some weakness develop, you're not likely to see much in terms of the overall market showing weakness. Yesterday, and we're going to get into this a little bit, the semiconductor index had a key reversal day. In other words, it made a higher high, lower low, closed down. And the same thing happened back on March 8th, and we talked about it at that time. NVIDIA did the same thing yesterday and on March 8th. And that ushered a period of about two to 3 weeks of chopping around sideways. And then there were two other key reversals in both the semiconductors and NVIDIA, April 4th and maybe April 8th. And then we saw a decline really unfold. NVIDIA was down 22%. The semis were down 17%. The S&P dropped 5.7%. So to me, Blake, the technical action in the semis and NVIDIA yesterday suggests we're nearing a short-term high in the market. The economic data point that I would reference, in addition, you brought up the PMI by S&P, and that's a mid-month read. So I always put a little bit more emphasis on, the actual final. But the retail sales number, which for the second consecutive month were softer. Now, the control group, which is supposedly a better reflection of what's happening with retail sales, wasn't as weak as the headline retail sales number, but it too has been working its way down. So to me, the consumer has been the linchpin underneath the US economy. And we're getting, I believe, more signs that consumers are gradually pulling back. Nothing's falling off the edge of the table, just gradual, restaurant sales. Well, they were doing great. Well, this last month they were softer. So are we seeing, for some people, a resistance to higher prices at restaurants and in general, and they're just deciding maybe we'll go out, once or twice a week, or pardon me, once or twice a month less than what we have been doing.
Yeah.
Not
Well,
earth-shattering, but worth noting.
okay. Well, look, let's get into what you feel and how you feel the market's going
Yeah,
to do here. But you brought us some charts,
yeah,
and this is an interesting chart because I saw this statistic yesterday myself. And I mean, but today's data is really kind of a
yeah. Reinforcement.
reinforcing. Yeah, it's reinforcing this.
Yeah, yeah. Well, you and I talk about contrary opinion. And to me, that means going against whatever the current narrative is that everyone is buying into. And if we went back 18 to 24 months, the narrative back then was we're in a recession. and you and I discussed it at length in terms of all the reasons why we weren't in a recession, which obviously proved true. Now we have this big swing having taken place where the majority of economists who 18 to 24 months ago were in the recession camp, now we're in the soft landing camp. So it doesn't make them wrong just because 88% think we're in a soft landing. One has to look at data that contradicts this narrative. And so to me, the retail sales that I just mentioned is one of those data points that suggests, okay, we're seeing not, again, significant, but just this gradual retrenchment in terms of consumer spending. And I think it's going to continue, which means we're going to get, in the near term, a gradual slowing in the economy. And I think as we get closer to the end of the year and in next year, I think the economy is going to slow more than what those 88% of economists think at this point in time.
But still, it's still everything that we're getting is really soft landing data at the
Material.
moment.
Absolutely.
Yeah, okay.
Absolutely. Now, here's another, argument that the complacency regarding the economy may be not completely warranted. This is the Citi U.S. Economic Surprise Index. And the way this is constructed, Blake, is that they take the estimates. Okay, we think retail sales are going to be up 0.4, and instead they come in up 0.2 or whatever the number was, right?
Yeah.
Home sales, they came in like 2 and so forth. So what this is, well, relative to what the forecast was, what was the actual data? And when it comes in under, this goes down. And conversely, what typically happens, what we saw in 2022, when everybody was screaming about recession, everybody lowered their forecasts. Growth was going to be contracting or very weak. And lo and behold, the numbers came in better. And so the surprise index went up. So, but what this shows is consistently, the majority of data points have been coming in lower than what economists expected. Well, that runs counter to the idea that, hey, we got a soft landing is in the bag. We don't have to worry about anything. So again, I'm not trying to be a contrarian just for the sake of it. I want to be able to look at data points that suggest that this complacency about the economy may be unwarranted. And so again, it's not going to be a light switch. It's going to be gradual because that's typically what happens at inflection points in the economy. When you go slowly, fade growth, and then you slide into a recession. It rarely happens overnight.
The next chart you brought, Jim, is regarding NVIDIA, which has been the powerhouse, and this really is something that was talked a lot about in some of the big financial news networks this week.
Yeah.
Tell us what we're seeing here.
Well, NVIDIA's valuation is got up to, I think, 3.3 trillion. So this one stock, which again, a great company, kind of have a corner on the market for the kind of chips that the world believes it needs. And its valuation is more than all the stocks in the United Kingdom, Great Britain, and France. All right, I don't know, that just seems a little excessive, but again, this is all relative. And at some point in time, what will happen is the bloom will come off the rose. And I think the next chart all right. This I just couldn't resist. It's kind of like human nature. Before we work on artificial intelligence, why don't we do something about natural stupidity?
That is actually funny.
I mean, I just thought, you know what? And if there's anything about natural stupidity in the world that we inhabit, especially in the United States, given people on the left and the people on the right, there seems to be a lot of natural stupidity going around here.
Well, this I think because you did have them correctly. I think this is the one that you're actually looking for. So,
yes.
Okay,
Yeah.
Here we go.
So my point is that if you look at semiconductors, they are really very cyclical. So in 2000, the advent of the internet, everybody was going nuts. Was the internet amazing? Absolutely. Think about if there wasn't an internet or the high-speed connectivity that we all take almost for granted these days, when the pandemic hit, how bad would the economy had been if we couldn't have access and utilize high-speed internet, to work from home and every order stuff, everything, okay? So, this stuff has been very, very significant for, easily 30 years. But that didn't stop the semiconductor stocks from losing 83% of their valuation, even though the internet, I think, exceeded probably a lot of people's expectations of what it would become and how it would shape, behavior in the
Yeah.
U.S. and the globe. Okay. And then the 2008 and 9 recession down 65%. So my point is, these stocks are incredibly cyclical and they're riding a wave. And AI, is it going to be meaningful? Absolutely. Is it going to change the way we live? Of course. But that didn't stop semis from dropping 85% during the 2001 recession, in part because valuations got stretched. So here's NVIDIA, stocks worth more than all the stocks in Great Britain and all the stocks in France. Is there an valuation problem? Yes. But near term, momentum has been really, carrying the day. So I just wanted to point out that, folks, look what's happened in the past. And even though everything that people hoped about or thought about the internet 25 years ago, I think came to pass, and even more so, it didn't prevent these stocks from getting pummeled. And so what will happen at some point in time, Blake, just like in 2000, 2001, as the economy slowed, companies needed to cut costs. Well, they bought less technology. So all of a sudden, we're going to see the enormous growth rate that NVIDIA and these other semis are enjoying. It's going to slow markedly. And if and when a recession shows up, the orders will decline. They're going to be negative. And that's what happens when you have an overvalued stock meeting economic reality.
Jim, I don't want you to poo-poo on the idea that I will have a C3PO robot with artificial intelligence in my coming years. So let's continue on.
I think that'll be wonderful, and I hope I get to meet him.
All right. Well, the next chart is NVIDIA, the key reversal we saw, and we were just showing the live view of that, but earlier. But what does this mean to us? Because
I just think we reached an exhaustion point near term, where supply, people willing to sell the stock, overwhelmed people willing to buy. And you can see the other red arrows back in March and April. Doesn't look like a lot because the subsequent move was pretty tremendous once it broke out of that horizontal trend line. But to me, it ushers in a period where we're going to see these stocks, which have been leaders, go through some choppiness. And I believe ultimately they'll have a deeper correction, like they did in April.
And okay, and this is the point, Jim, where I go into our conversation about I'm going to ask you the question here in a second, but I want to ask everybody that's at home watching, if you like what the information that Jim's bringing you, make sure you give him a thumbs up, subscribe to the channel. These are exclusive interviews only here on Trader Summit. And then ask some questions down below. If Jim's really good about addressing questions in the comment section. But isn't this the point? And we're going to get into your charts, isn't the point in the rally while we're at all-time highs that we don't just see, we might see some profit taking in NVIDIA, but we'll just get rotation into maybe some of the underperforming markets, maybe some European markets, maybe not so much France and the CAC 40, maybe into the DAX, maybe back into the Nikkei, maybe back into the Russell 2000, and maybe some of these beat down bank stocks, you start buying them up. So what's to say that this leadership, even if it disappears, that it's going to be some sort of big negative for stocks? What's your answer to that?
Well, if you look at what happened in March and April, what you described is exactly what happened. I'm assuming that people are going to look at that experience and say, okay, it was time to buy some of the stuff that was beaten down. So the Russell got a bid, and the other sectors that were dragging got a bid. I would be, that's why I think initially it was a sideways chop for the S&P, because you had that rotation that you just described taking place. Again, the mindset of these folks, I had somebody, subscribers say, hey, Jim, is it time to go short? And I said, yeah, and this is when the S&P was down like 15 points or so this morning. So, but there's going to be a rally because the mindset of buy the dip, is so prevalent that we're going to see the S&P rebound. So, this is kind of a shot across the bow. You get a dip, and sure enough, the Russell was down, but not much. And the last time I looked, it was up a little bit. So to me, what you're describing is exactly what I would expect to happen. But my guess is that we're going to see, April play out just like we saw sideways in March, that there is going to be a pullback of some magnitude in the broader market after we go through this rotation process.
And then this is where you're going to show us. So, Jim, let's start with your dollar chart, because that's the first chart you brought. Now, the dollar, you were expecting some downside. Obviously, the European, the situation in Europe is kind of changed. It looks like it's changing your perspective. I'm obviously going to get it. It's changed my perspective too. I was trying to get on the dollar bear train, but I'm just not there at the moment. And here we have the dollar index inching back up towards resistance. We're in a triangle, so it's really quite messy, of course. But what are your thoughts here with the dollar?
Well, it's still possible the dollar's in the triangle, but to me, that it got above the high from last week, I was like, okay, better take notice of that. When I pulled back and looked at the bigger picture, it's kind of like, all right, there can be a case to be made that the dollar could rally up to 109 and change. That you had a 5-wave decline coming off the October 22 high, then a big A, B down to 99.57, rally up to 107 and change for C. And then to me, it looks very clear. 1, 2, 3, 4, 5, going down to that low just above 100. And that's why I thought, okay, we'll get an ABC rally and then we're going to roll over. But to me, I have to open up my mind to the idea that, all right, you might be getting another ABC from the 100, the 100.62 low there in late December. And you had an ABC up to the 106.52, very choppy pullback to the recent low at 103.99. And the way it's coming on, it's like, hey, one has to look at the potential that this is just another ABC up, and we're about to go into wave C. And 2 weeks ago, the issue in France wasn't on anybody's radar. Really, and now this morning, polls came out showing that Macron is not faring well, and I think that give the dollar a boost. And I'm just trying to, it's like, hey, this is a viable potential that the dollar, now confirmation obviously will come when and if the dollar closes above that red trend line, because it does that, then the idea of a triangle goes out the window. So to me, the odds of a triangle persisting here are going down. And this is just an acknowledgement that, all right, some new information has come in over the last 1 to 2 weeks, and it's playing out in the markets. And okay, what does that potentially imply? And that's what this pattern suggests.
Got it. Well, we're going to be on the lookout, especially coming into this election over the course of the next I want to say 9
June
days.
30th and July 7th.
Yeah. So some big ones. All right. So the next chart you brought, Jim, is the gold chart, and I'm gonna grab it really quick. There we go. So gold, got a little perky earlier this week. We've come off a little bit, but how are you reading this range?
Well, yesterday's rally, I mean, again, the bigger picture for me has been is we're going through this correction since the high, whether it's 24.27 or the 24.49. That's wave 3, which means we're going to get a wave 4 pullback, and then we're going to go above whatever those highs were, maybe to 2,500 or higher. And up until yesterday, I was like, I think we're going below 22.88. But yesterday, the gold got above that red downtrend line. And so to me, it's like, all right, am I trying to be too perfect? It's got to go below 2288. I actually sent out a special update to subscribers saying, you know what, take a half position in gold because if it's going to 2500, this move today, I actually said, does not eliminate the potential that gold could drop still below 2288. But we don't want to miss a move above 24 or 2500
Yeah.
either. Today's action reinforces that potentially from 2449, got an ABC down to 2288, ABC up to the intraday high in overnight trading last night was 2367. So if the gold dropped from 2449 to 2288, $161, you get an equal decline. In other words, we're entering wave C now, potentially. Dollar's going to keep going. Gold could drop down to 2206. So right before we did our interview, I sent a special update and say, folks, a little bit of a head fake here, but I don't want to be long, if potentially 2206. But at a minimum, this pattern would imply a drop below 2288. So do you want to sit through that? No. So to me, I'd rather, take a small loss on a 50% position than sit through what potentially could be, kind of no fun decline.
Yeah.
Because if gold drops below 2288 and there's a low coming after that I think will be significant, and there will be a rally above 2449 and closer to 2500. So I just don't want to sit through a decline that could be kind of no fun.
Yeah, that makes a lot of
So the
sense.
combination of what the pattern in the dollar, the pattern in gold says, wow, a lot's changed overnight. I mean, this morning, 2367. That's, hey, it's following through. Good thing. And then it fell out of bed. So
All right. Well, the next chart you have is the S&P. This is what everybody wants to see. Are we now I see counts up to 7 and 8. So tell us what we're seeing here.
Yeah. Well, waves are supposed to go 5 waves. Extensions go 9, and even as long as 13 different waves. So when I look at the low from 5191, it's like 1, 2, 3, 4, 5, 6, 7, the high yesterday. Pull back today, maybe wave 8. That implies there should be one more rebound above 5505 for wave 9. Now, as we talked earlier, the reversals in the semis and NVDA to me imply that those things are going to go through a deeper correction. And I think the bouncing the small caps in the broader market won't have much staying power. And so I think we're nearing a high that'll be followed by, I believe, a 5 to 7% pullback. So to me, the pieces are falling into place, but I would look to go short above 5505.
Okay, so you're looking for a short somewhere up here.
Now this is a 2-hour chart.
Yep.
And again, as I point out, the red line is a 5-period expo, the green is 13. And that to me is a signal line in the sense of, again, the semis are still holding up and so forth. So I want, you need to see confirmation that, that reversal yesterday actually is going to amount to something. But I think the pieces are falling in line here for at least a modest pullback in the market. And then the nature of that pullback, if it arrives, does it do a 1, 2, 3, 4, 5, or is it another ABC? If it's an ABC, we're going to go to higher highs. If it's 1, 2, 3, 4, 5, then I think we might have a more significant top in place. But we can't know that until we get there.
Okay. Well, the next chart and the last chart is the TLT, and I mean, I think it looks pretty bullish still, but and I know you're targeting much higher than where we're currently at.
Yeah.
What are your views here?
Well, I think the high that we saw in December was 100 and change on TLT. I think it's going above that. I think potentially 105, 109. And to your point, you got higher highs, higher lows. To me, a position, the stop, we shouldn't take out that 90.65, to retain the bullish upside pattern.
Yeah.
It's kind of like what we saw in gold. it did it for one day. It got above a declining trend line. Well, TLT's been doing it now for about 2-3 weeks. So, getting below 90.65 and then potentially getting back below that black descending trend line, that wouldn't be very constructive.
Right.
So again, I think, again, my overall view is the higher for longer means the economy, the probability of a deeper slowdown is coming. Dollar strength, I don't think, is bullish for the U.S. economy. So, that we'll see if that follows through to the upside. But that, to me, would be another negative. As the dollar gets more and more expensive, exports start to get more expensive, and that hurts the U.S. economy.
Yeah, and yeah, and I
that
mean
takes
it's
time.
we're seeing, I've told some people in our community, we're seeing some evidence of, gold's bid, dollar's bid. You got yields falling, dollar doesn't care, so the bond market's bid. Bitcoin's showing some softness. Those are little tidbits of information that tell us that the market's on edge, and I think we should be cognizant of some of these things.
Yep, I think that's a great point. Like yesterday, one of the things that was encouraging to me was the dollar was up and gold was up, and it's like, okay, this looks real.
Yeah.
Well, it didn't last. So, to your point, you got to keep your head on a swivel. Sometimes there's times where you really need to keep your head on a swivel, and there's other times you can kind of keep your head on a swivel.
As we would say when I was in the Marine Corps, stationed in Camp Pendleton, California, my last year of my service, just down the street from where you live, watch your six. Watch behind you. So anyway,
but
Jim,
now we're saying watch your 6, watch your 3, watch your 9, and maybe even keep a real eye on the 12.
Jim, I tell you, I for one, and I know I'm echoing the sentiment for our community. I really appreciate you taking us through all this data every week. And again, if you like this information, make sure you give Jim a big thumbs up. But Jim, if they wanted your notifications, like I got the gold notification just before here. How do I get
macrotides.com or send me an email, jimwelshmacro@gmail.com. I'll send you a recent report. But I really enjoy our conversations every Friday, Blake, as well. You ask great questions. I think we have some repartee.
Very nice banter. All right. And thank you all for everybody that jumps in the comments section below. It really does tell us that you're engaged with these conversations too. So Jim, have a great weekend.
You do.
We'll see you next week before the 4th of July week. So
good.
Have a great one, and I'll talk to you soon.
Stay cool.
Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.